All right, everybody, let's go ahead and get started. We are going to be live with you this evening for probably about, I'd say 30 minutes. We have got a great presentation for you tonight. What we are doing this evening is that we are going first and foremost into a really exciting program. It is by a great group of people, and we are going to just in 1 second here, a little technical issue there, but I think we are now on YouTube, hopefully. All right, so what are we doing tonight? Ladies and gentlemen, we are here talking with Huntington Bank about their no money down program for doctors, dentists, veterinarians, some other medical professionals. So it is a really exciting program. I got familiar with it first with a client a couple years ago. There's very few lenders and banks that do it. It is a very unique program, but it is huge for our medical community. And what it does is it gets these medical professionals into a property, in some cases up to $1 million. Rob Jones from Huntington Bank is going to be with us here to tell us really the details, all the full details of the program, because he is the true expert in it. But I did one of these with a client. They had a lot of debt from many, many years in medical school, which is that, it seems to be everybody has so much school loan debt and education debt these days, but especially our medical community. And so it's a specific type of loan program because of what the medical community does for us. And also, quite frankly, they're a low risk potential in terms of, default on a loan. So I got this one done through Huntington Bank. I was so impressed with the way that the staff at Huntington Bank, the loan department, everybody just got everything done so smoothly. I was actually shocked, unlike some other loan programs that cater to a lower down payment and have a lot of restrictions and hoops to jump through. I just thought this was a class program. So then I did another one, and then I did another one. And so it kind of became a little bit of a niche for me and for some other real estate professionals out there that deal with the medical community. And again, at the end of the day, we owe a lot to our medical community. And so tonight, I'm very grateful. Speaking of owing things, I'm just very grateful that Huntington Bank came and said, "Hey, Nick, you want to come and do a live event with us?" Because I just was not able to put one together on my own, because knowledge base wise, it truly is the lender that is key in these special programs. So without further ado, my lender for Huntington Bank for the doctor loan program, Rob Jones. Rob, you've been great with my clients. I really appreciate you guys having us here live in North Barrington, along with a few other people. So we're going to go ahead and have Rob start his presentation. This is again being broadcast on YouTube, and we will now go ahead and do our live screen share as well. And Rob, do you want to go ahead and open the right thing before we want to open the wrong people's loan file? There we go. And then I'll go ahead. Perfect. Thank you, sir. All right, everyone, in just a moment, you should be able to share our screen. Live events, my friends. Just 1 second here. All right, so we should now be in the right screen with everybody, hopefully, and we'll be able to get in there. All right, Rob, good job. We've got it where we should be. So Rob, go ahead, and I'm going to let you introduce yourself and take it from here.
Well, thanks, Nick. Thanks everyone for joining us tonight. Excited to be here in person. Nick and I did the similar clinic on this program back in December of last year. It was all on Zoom, so happy to see him in person this time. I was also on a podcast with Nick a few weeks ago regarding this physician loan. We got everything done in about 30 seconds. So tonight we'll go through A lot more to the program. We'll get into some specifics, some guidelines, and some real life applications. Nick and I also helped a psychologist purchase a condo in the spring using this program before they officially started their job after residency. So we'll talk a little bit more about that later on. But my goal is for you to leave here with some knowledge about the product, but also some, more importantly, some ideas you can use to help your clients and hopefully attract some new ones. There's a lot of potential to help people in the medical field buy homes, invest in real estate, and generate wealth. And that's what we all do best. So if you have any questions, you can put them in the chat. Put your contact information with it. And if we run out of time or anything, I can always contact you directly to get your response, talk a little bit more. If you don't have a question but want to discuss some ideas further, happy to reach out to you too in the coming days and weeks. But my name is Rob Jones. I've been helping people buy and refinance residential property for 16 years. There's basically three types of mortgage lenders. There's banks, credit unions, and IMBs, or independent mortgage brokers. There's also some, private lenders and hard money lenders, but those are the main three. Banks and credit unions take money on deposit and then lend them out to their clients. National and regional banks are typically publicly traded. Credit unions are like mutual companies. They take all of their profit minus expenses and then give that money back to their members in the form of lower loan rates and high deposit rates. IMBs work with and sell loans to various investors and institutions. So if you've ever had a mortgage that got sold to Chase or even Huntington, you probably went through an IMB. There's pros and cons to each of those business models, and each one can make a pretty good case that they're better than the others. But I haven't worked directly for an IMB, probably because I see a lot of value in being able to lend directly to consumers with what's called a portfolio loan. So portfolio lender allows lenders to fund loans that might not fit in other boxes. Fannie Mae, Freddie Mac. The physician loan we're talking about tonight is a portfolio loan. So a little bit background on myself. I started at a credit union right out of college doing consumer loans, car loans, home equity loans. Back then, we actually took applications, underwrote loans, and then funded them all ourselves. We did that for about a year, but shortly after that, they got a underwriting department and closers. But it gave me a pretty good crash course in risk management. So I've been reading credit reports daily for almost 16 years and working with clients to find solutions for their financing needs. I've been originating residential mortgages since 2008, and I took a couple years off in 2012, 2013, and I worked on the correspondent side where we bought loans from IMBs, the guaranteed rates, and what used to be Pearl Mortgage and Stearns Lending. So I got to do a little bit of traveling, but it gave me a pretty well-rounded knowledge base of the industry. And then somewhat from a unique for a loan officer, I also hold a managing broker's real estate license I've had since I was 21. I only used it a handful of times for myself, but it helps me keep up with what my realtor partners go through every 2 years with continuing education. But throughout the years, I've learned that one of my passions is helping people in the medical field with their financing needs. Oftentimes, people in the medical community are so focused on their careers and helping other people that they put off investing, whether it's real estate or otherwise. And this is really a great opportunity for us to educate these crucial members of society and really make an impact on their lives. So let's go through some specifics on the program itself. Keep in mind that guidelines can change. Most people don't know what their actual credit scores are when we run them for a mortgage. So, I want you to understand these, and if you have any questions, let me know. But I don't want you to miss out on any opportunities quoting specific guidelines, minimum credit scores, things like that. Just think about ways you can use the program, and then let me know as opportunities come up and we can work through specifics directly with your clients. So as I mentioned, there's a portfolio product too, so there may be some room to kind of massage the guidelines a little bit if and when it makes sense. So again, if you have any opportunities, feel free to reach out directly with any questions, scenarios, so we can get those, get those addressed and hopefully get some more, people in homes. So the big headliners on this program is 0% down up to $1 million. So a doctor can buy a loan or buy a house, $1 million, no money down. They'll pay closing costs and they'll pay some escrow funds, but no money towards the down payment itself. We do 5% down up to 1.25 million, and then 10% down up to $2 million. So doctor or potentially a resident can purchase a $2.2 million house with 10% down. There's no PMI on these. So typically when you put 20% down, less than 20% down, there's mortgage insurance. In this case, there's no mortgage insurance required. The rates are also lower than a non-doctor. So if someone comes in and they're at 5%, a doctor's probably going to be at 4.75 or maybe even 4.65, depending on the day. So it's really truly a pretty big benefit to the medical community and doctors that qualify. There's no prepayment penalty, and the credit scores are, it's 700 is the minimum for 0 down, and then 680 if they can put 5% down, which isn't too high of a bar to cross. So a lot of them, do end up qualifying. So the types of doctors that qualify for this loan, there are 2 types of medical doctors. There's an MD, which is a doctor of medicine, and then a DO, which is a doctor of osteopathic medicine. They both go through similar education. Osteopathic just is more of a holistic approach. Other than that, it's pretty much the same, and we cover both of those. Dentist is pretty similar. There's a DDS, which is a doctor of dental surgery, and then DMD, which is a doctor of medicine and dentistry. And these also have the same education. It just depends on which school offers which designation. Beyond that, we also have the podiatrists, ophthalmologists, which is different than an optometrist. An optometrist is basically somebody going for an eye exam. Ophthalmologists can do surgeries, LASIK, things like that. And then veterinarians are also eligible. And you'd be surprised how many veterinarians there are in the Chicagoland area. So doctors, the steps they go through to get their field is pretty rigorous to get to their end job. They go through undergrad, pass the MCAT, they go to med school, they get licensed. Once they're licensed, they can actually start looking at, opportunities to potentially invest in real estate, purchase a property with this program. They then go through their residency, possibly a fellowship, and then they become a full-blown doctor. So it's a long process and a lot to think about as they, try and navigate those different steps. So a lot of times they're just not thinking about, hey, can I buy a house now? It's just they're more focused on getting through these steps, which is where we can come in, educate them on what's available, and then hopefully get them on a path to real estate ownership, investing, and things like that. So physicians and medical doctors are typically benefit a little bit more due to their path from med student to resident to perhaps a fellow to a doctor. Dentists and veterinarians can join a practice, buy a practice, they can start their own. MDs and DOs go the same route, but they'll usually join an existing practice or hospital, and then they're paid on the W-2. So that sometimes it's easier to get them qualified. Sometimes the dentists and veterinarians can come in on a 1099, which makes it a little more difficult. But again, if you have a situation, just let me know and we can talk through it, make sure that it makes sense. But let's back up a little bit, talk about resident programs. Like I mentioned, Nick and I worked with a psychologist to purchase a condo in Chicago this spring. They were finishing their residency at the time and had a job lined up just a few months later. I think we got them pre-approved in January. They were under contract in March, and then they closed in May. And they didn't start their full job until August. So it was really a great experience. Everything went well. The client was great to work with, but they were able to purchase the condo. I think might have been a penthouse, but it was nice. Yeah, it was a nice, very nice, 6 or 7 or 800,000. While they're still making their resident salary, so 60 or 70,000, I believe, and then we were able to use their future salary because they had a contract signed. But it was really powerful getting them a place to live near their work where they can settle in, get comfortable before they started their job. I can only imagine that, leading up to your first doctor job is pretty stressful. So they were able to kind of get that all taken care of up front, kind of kick back, get ready for their new job, and started on, I think it was August 1st. So like I said, helped out that the client was great to work with, inquisitive, asked good questions, super nice. So all in all, it was a good transaction, and one that we can really kind of duplicate. Like I said, most people don't understand that they can actually qualify for these with their future salary, even though they're not in the position yet. So it was very rewarding. I think Nick can agree. It was just a good situation all around. So, but there's potential to help people even earlier. The program's available for all doctors, but really intended for new ones, and then even new residents. I think everyone here would agree that if you're going to be at a location for more than 2 years, it would make sense to buy a house versus rent. Residency programs are generally 3 to 4 years, and residents generally don't know that they can take advantage of these programs while they're in residency. So think about, who you know in the medical community. If you know any residents, anyone that's graduating, medical school, those are all opportunities to educate them, their classmates, and see if we can help as many people as possible. So if someone was, to buy a modest place while they're going through residency and then, live there, they can then, when they move on to their, final destination or, next destination, they can rent out the property when they leave, sell it for a profit, hopefully, when they enter a fellowship or even the workforce, and they can use the program again when they buy their, next stop. So they could potentially, buy two homes, 0% down, and it's just a huge advantage from a wealth building standpoint, on two separate transactions. I've got another client that I did a loan for. She was in residency, or she went through med school in Texas. She moved to Columbia, Missouri while she was in residency. She lived there for 4 years and then moved to Indianapolis for a full-time doctor job. While she was in Missouri, though, she purchased a modest home, or maybe 350, 400. Lived there, and then when she left, she didn't want to be a landlord, so she sold the property for a 50,000 net profit, roughly. So she had kind of a dilemma: should she, use that towards the new home or pay down student loan debt? Not a bad dilemma to have at all. So helping these individuals progress through their real estate journey is an important task as they focus on their career and their patients. A little bit about relationships. Huntington, we want to help these clients throughout their whole journey, and we're all about relationships, deep relationships. We also offer a discount for nurses, $500 off your closing costs for a nurse, and then dental hygienists. I've got another flyer for a dentist too, so I can share those if you're interested. There's also ways we can actually co-brand these marketing materials. So as you have some people in the fields, if you wanted to reach out with them, with some information, we can actually put your picture, your information on this flyer next to mine, and then kind of approach them together. But between the doctor and the nurse, discount and the doctor program, it's pretty attractive, a pretty attractive value add for hospitals, medical groups, dentistries, veterinarians, and again, you can do this while they're still in school, essentially, as they're getting close to being licensed. Beyond the loan programs, we also have a practice finance for doctors, dentists, vets, if they want to buy into a practice or sell a practice, purchase equipment, buy an office building. We have construction loans options available. I'm currently working with a dentist right now on a new log cabin in Wisconsin. That should be pretty cool. If you're licensed in Wisconsin, there's a pretty good medical community that's up there as well. And then we're kind of new to the Chicago market, but being headquartered in Columbus, we have relationships with some large companies like Ohio Health, Ohio State University, where we kind of partner on the corporate level. So something else to think about if you have anyone that in HR at a hospital or a medical group, we can form a partnership where all of their employees would get some kind of a discount. They allow us to do, in-person seminars, webinars, first-time homebuyer things. So if you have any contacts there and would like to partner on things like that, I'd be happy to kick around some ideas and see if we can come up with ways to, like I said, educate these medical professionals, and just let them know what's out there, so we can hopefully get them into a home and get them on their path to investing in real estate. As far as lenders, I'm sure everyone here has a go-to lender they partner with for their clients. You should definitely have at least one. But ideally more, because different lenders offer different programs. There's some niches that you can kind of pick up that you may not even know about. Our doctor program has been around for quite a while and it's not going away anytime soon. There's some others out there like it, and a few that were recently discontinued. One of the IMBs had one in February, and I think it was gone by June. They're just beholden to their investor, whereas this is a portfolio product, like I said, so we lend out our own money, and we have an appetite for these types of loans. So, let's see. Just wanted to touch on a couple more things. With all the
notes, I just want to add one thing for everybody. Rob and I had a conversation the other night about what people qualify for this, and I kind of had a limiting belief, which I don't like those, and about like a certain person I showed you his LinkedIn, and it's somebody that's in the medical field and holds a degree, but it's not the degree that we were discussing, or the ones that we've mentioned here. And just like the friend of mine that we did the deal with the transaction with the summer, it doesn't necessarily mean a no. So I'd rather have everybody contact Rob. And I know there's going to be some questions we'll navigate here in a little bit at the end, because he's still got some great content for us. But if you don't hold one of those degrees, but you are someone in the medical field that is a related doctor or something, ask the question, because otherwise, if you just read off the flyer, you may think you don't qualify, and there may be some way to have an exception if you're excelling in your practice.
Yeah, great point. It doesn't list podiatrists on there, but we do have a relationship with a bone and joint company around here, so they do podiatrists, even though it's not explicitly listed here. So absolutely ask the question. If we can't give them the bona fide doctor program, there's probably something else that we can do for them, in some other capacity, make it more attractive, and kind of give them the best deal possible. There's one thing I watched one of Nick's other seminars recently with another lender, actually, and one thing she said stuck with me. She said that if you have a great lending institution and a subpar loan officer, or vice versa, you're not really going to get a great experience for your clients. I think that's a great observation, and one you can use to your advantage. I personally work with a lot of other loan officers. We can all do things a little bit differently. If I can't do something, I probably know someone that does. So feel free to use me as a reference. Happy to give my honest opinion. If I have a client that comes to me with a different offer and it's truly better and I can't match or beat it, I'm happy to let that client know. I'm always probably going to get a look the second time around, just for being honest. That's kind of how I operate. And then with all the turmoil in the industry right now, I think deeper relationships you have with clients and partners, the better off you'll be in the long run. So hopefully you got something out of this tonight. We can take some questions or talk about some other options as well.
All right, so I'm going to turn off our screen share because we have some questions, and every once in a while somebody slips in a private comment that they may not have meant for the public. So we're going to go ahead and stop the screen share. We're going to see here first off in the group chat. So there's somebody that wants to contact wants you to contact them. So if you want to take that number down, Dr. G, we will get that to you. And then what about optometrists, ODs? And so Rob's going to pop back over here, and I'm going to run up to to my cell phone and see if there's anything on YouTube as well. So we're just reading the questions right now off of Zoom, and I'm going to run up and get the YouTube questions.
So optometrists, we don't do optometrists. Ophthalmologists, we do. Optometrists would be like an eye exam. Ophthalmologists do surgeries and a little more involved. So that's the difference there. But I do have your information, Angie, so let me just write that down. I can reach out to you. And we can see if there's something else too that might make sense for an optometrist if that's what they're looking for.
So this is Cassandra. Good evening, everyone. While Nick is grabbing the comments from YouTube, can I ask a quick question?
Yeah, certainly.
So you mentioned the loan program can be used. Let's say they're living in another market and they decide to rent that house out and maybe they move from Ohio to Chicago. You said that they would still be able to utilize that same type of loan, but will that change? Well, I'm assuming it would change the rates because the rates are going to be based on market. But is there anything that they need to do to their first primary residence before being able to be approved a second time around?
No, they'll indicate what they're going to do with it, whether it's rented out or sell it at closing. So that'll be one of the underwriting requirements. But from a rate perspective, there's no difference. They're still buying a new primary home. So as long as they live there for at least a year on the first property, and you can't do this every 2 months and keep buying properties, but as long as you live in the first one for at least a year, then yeah, the second one will qualify as a primary residence.
Perfect. Thank you so much.
And Cassandra, that's a great question because I do believe one of my clients that has worked with Huntington, they did it more than once, and not within 2 months, of course, but over the course of time, they actually, a medical professional, got a great career here, but got a great offer elsewhere and turned around and did do something else with that property. We got a question off of YouTube, and that is, how long normally do these loans take to close?
It's no different than a typical loan. So 30 days would be ideal. If you need to close sooner than that, we can probably pull that off. Longer time, the better, obviously, but 3 weeks might be a little, too soon. 4 weeks to 35 days is usually no issue.
Well, guys, unless anybody else has a question that they want to unmute themselves on Zoom, on YouTube, we have about an 8-second delay, and it's not because I was planning on using bad language. That's just technology. So on YouTube, it looks like we didn't have any other questions as I ran back in the room. So then if there's no other questions here, we will go ahead and make sure that everybody has Rob's contact information. Do you want to go ahead and, Rob, you can put it in the chat, but then say it as well for the people at
Yeah, absolutely.
people on YouTube.
Rob Jones, ROBJONES, and my direct number is 847-651-6871. And then email is rob@huntington.com. So feel free to reach out. Any questions, any ideas too. If you say, hey, I know someone that might know someone in the medical industry, I'm happy to come up with ways to, approach them. It's kind of an art. I've gotten leads from a class president of a medical, medical class. He told his friends they had no idea they could buy houses, and ended up being a pretty good situation for the agent, myself. So if you have anyone that you think might be worth approaching, feel free to reach out. We can kick around some ideas. We could target them with emails or calls, or and kind of work on a strategy that way. So,
Hey, Rob, it's Cassandra. I have one more quick question. I'm sorry.
Yeah, absolutely.
So you talked a little bit about the resident being able to take advantage of this loan. And you may have said this, and if you did, I apologize. What is the debt to income ratio that you all look at for these types of loans? Because I would assume that the doctor or the resident would have, at some point, that debt's going to show up on their credit report. So do you know what's the typical DTI?
50% is the maximum.
Got it. Okay.
We can sometimes go over. It's a higher interest rate and not the best situation, but we also have a student loan calculator that's a little bit more favorable than using the typical 1% or 0.5%. So we kind of run that through at that point, and it gives them a pretty low payment on the student loans. So 9 times out of 10, it's debt to income ratio is not going to be an issue.
Okay. And last question, is that the front end ratio or the back end? I'm sorry.
That's a back end.
Thank you.
Absolutely.
All right. Well, if there are no other questions, I wanted to just give one other brief update before we let everybody go tonight. And same way with you guys on the simulcast or catching this later on YouTube. We have some other stuff coming up at Exit. Of course, we do consumer events every month, and we have some exciting stuff coming up. We have speaking of doctors of different types, I have a friend that's a doctor of chiropractic that just opened a clinic. And we are going to be at his location and just doing a little bit of a health and wellness check. And since we've been talking a lot about loans lately and that type of stuff, we are going to swing back over to that aspect of our 4 focuses here at Exit Strategy Realty. And then we are going into some seller related conversations about staging as this market has shifted a little bit. And if you guys are seeing some of our agents were reporting on the market statistics on their LinkedIn today in a video that was posted. The market slowed down a little bit. We want to make sure that you have every piece of ammunition as a seller, and that in terms of staging and photos and all that good stuff. So we're gonna have a wonderful seller seminar coming up too. So stay tuned to your Exit Strategy agent for that. And we appreciate you all very much for being here today. And we will have another big announcement soon about short-term rentals, building a database of some of those in the city. It's a pretty rare occasion that a condo building allows them, but I got a list for you. So thank you all very much for being here, and keep in touch with your Exit Strategy agent for more. Have a great night.
Thank you. Thank you, Rob.
Thank you.